Hi, everyone. Welcome to today's discussion, the webinar hosted by The Papers. I'm Mirela Ciobanu, lead editor with The Papers, and I'm thrilled to have you here with us. In 2025, The Papers is diving deep into Web3 payments to help businesses and consumers confidently leverage options like stablecoins, tokens, and CBDCs for faster and more efficient transactions, both domestically and globally. To do so, we have organized a series on video interviews, articles. We also plan a report, and of course, lots of webinars. The first in line is today's panel called Web3 Payments, Unlocking Faster, Cheaper, Borderless Transactions, that has gathered an impressive lineup of crypto payment experts that will reveal everything we need to know about how Web3 payments work and how to seamlessly bridge them to Web2 payments. Today, I'm joined by Massimiliano Silenzi, CEO and co-founder of Crypto Refills, Eric Barbier, CEO of AAA, Daue Liclama, Vice President of Inopay, and Nicolas Coric, CEO of Electrocoin, who are going to explain what are Web3 payments. Also, they are going to share key use cases. Where do these all fit? Challenges and risks. Also, they are going to talk about practical steps that banks, merchants, PSPs can take to tap into Web3 payments. And if you want to build a Web3 payment strategy for 2030, what are the main things you should know? If you are interested to find out more about the companies that they are representing, I invite you to check our handout section in the right side of our screen to download some materials. Also, before we start our discussion, some housekeeping rules. The discussion will last approximately 40 to 45 minutes and is going to be followed by a Q&A session. Therefore, we encourage all of you to submit your questions in the Q&A panel. Also, we have subtitles available for this webinar. To enable them, click on the CC icon located at the top right-hand side of the webinar room, where we have there a selection of languages: English, Spanish, Italian, German, French, and Portuguese. So this is the housekeeping. Without further delay, let's get started. All of these guys that are here, I know them for a long time, and they've been involved a lot in payments in general, and mostly in the last period in crypto. So that's why I decided to call all of them to ask for their expertise and know how to help us understand more about Web3 payments and DeFi. So I'll start with Massim. Can you please tell us a bit about yourself and what Web3 development do you think has the most potential to disrupt payments?
So background, yes, we've known each other for a while. Thanks, Mirela. I've been in payment technology since about 15 years, mainly with an angle of looking at payment channels as a way to attract new customers. So marketing and also loyalty programs, mobile payments, mobile carrier payments. And with this conviction, I founded together with Simon, Luca, Mats, and Francesca Crypto Refills, and we're a crypto commerce platform through which you can purchase anything from booking flights, hotels, gift cards, mobile credit, eSIMs, and paying this with cryptocurrency. What do I see has the potential to disrupt payments? I think there's definitely two things which are actually disrupting payments now. That's stablecoins, number one. And number two is alternative to the Ethereum mainnet, which are like layer 2s and alternative networks through which these stablecoins can be transacted very quickly and at a very small price. So I see these two things are actually, accelerating the disruption.
Great, thank you. You already went a bit into technicalities, but will the audience will let them stand still. Later on, we'll go more deep into these aspects. Now, Eric, please tell us more about yourself and what are the biggest benefits that crypto payments bring?
Yeah, thanks for having me, Mirella. So I'm the CEO of AAA, a company I started like 5 years ago. Before that, I started a company in the traditional payments called Tunes. And at AAA, what we're doing is we're using the stablecoin rails to improve cross-border payments. So obviously, I will 100% agree with Massi that stablecoin will change the way cross-border payments is done, especially in emerging markets. But I think it has even more potential than that, and I'll be glad to discuss that during this session.
Yeah, great. I like the fact that you come, from not necessarily traditional, but more. Common PSP like Tunes, and now you are transitioning to a Web3 company. And Dawe, please tell us a bit about yourself. And we heard stablecoins twice, but I think that there are other things that are so exciting about Web3 payments. So a bit about yourself and other things that excite you about Web3.
Yes, with pleasure. I fell into the payments rabbit hole 25 years ago. When internet was growing, the mobile revolution was there, e-commerce was starting, and built out of there a consulting practice called InnoPay, which we started in 2002. Last year, a team of 50 people became part of Oliver Wyman, and at InnoPay, I have been involved and fascinated in two-sided markets, basically, which is about payments and digital identity and data sharing. And we became very much specialized in scheme development and all sorts of innovations around the payment ecosystem. It was fintech before fintech was a word. And we also ventured into the whole open banking space. But with curious people, you bump into development, and around 2010, 11, we bumped into the whole crypto world and started following that and engaging that because it immediately grabbed my fascination and attention, simply because it has a huge disruptive power comparable to the voice over IP change. Let's say in the telecom we had voice over IP revolution about 25 years ago that started. It was sort of a silent revolution on the back end. And at the front end, we got only better, faster, and cheaper services. And I believe that in the payments world, we are also on our way continuously to get better, faster, cheaper services. And the whole Web3 movement or digital asset movement and the whole market infrastructure around it really excites me because it offers tremendous opportunities and proven by the whole entrepreneurial lineup we have today. So looking very much forward to our conversation.
Yeah. And Nicola, we have here another representative of seeing exactly how crypto payments work with Electrocoin. But he will share more about his role, his expertise. And since Dawe mentioned curiosity and disruptive power of Web3 payments, we see lots of traditional institutions stepping into Web3. What is driving this shift?
Hi everybody, my name is Nick. I'm the CEO of Electrocoin. We started some 10 years ago first as a brokerage, and then in 2018 started the first payment processor, a crypto payment processor in Croatia, and now basically everything in Croatia can be bought using Bitcoin. It's an interesting question because in 2019 we had partnership with the Croatian Post, which has a service of buying and selling crypto for cash in all of the post offices in Croatia. So what motivated them was at first curiosity and innovation. They're doing something new, something that's hype as it was in 2019. But in the last year, I would say, we see more and more let's say serious implementations of crypto in traditional financial institutions, especially banks, asset managers, brokers, and payment processors. And it's mostly because that's what young people want to do. So Croatian Securities Administration did some research, and it turns out that cohorts below 25 years of age are more interested in investing in crypto than in traditional securities. And now most big banks, at least in Croatia, but I think in the rest of Europe, have funds, money funds. Some even offer stocks trading in their interface, and it turns out that crypto is what the young people want. So yeah, we've been seeing, especially in the last year since markets and crypto assets regulation stepped into effect, real surge of interest with banks. And in the last few years already, payment processors, payment institutions venturing into the whole crypto payments business.
Yeah, and since we mentioned other institutions' interest in crypto, and we also want to keep you, our audience, engaged, we have a poll question for you. So, yeah, we are curious to see to what extent is your organization engaging in crypto services. And we have here different options, like just testing the water, offering services, you are not engaging, pilots, deploying. So we encourage you, to submit your answer. And also if you have questions, some questions in the chat panel. And after, we define more what is Web3 and all everything related to it. We'll return to the answers our audience had for this poll question. So yeah, we talk a lot about crypto payments, Web3, DeFi, but first let's see, what is Web3? What is decentralized finance? Though they are not similar words, but let's take them as a new ecosystem. Nicola, kick us the discussion with.
Yeah, I think the word ecosystem is a good word. We have this overarching a crypto, let's say, ecosystem that started with Bitcoin 15 years ago, and then started branching into several cryptocurrencies. And in the beginning, it was just payments. Then it was a store of value, and with time, different narratives and different ecosystems started building around it. So Web3 is this notion that in Web 1 you had just you need to have a server so you could develop your own web page and publish information. In Web 2, the users started creating everything that's put on the internet. So it's social networks like Facebook, Instagram, stuff like that. And in Web 3, you start to own that content, because the problem we are trying to solve here is basically Instagram has some kind of ownership of your pictures, but with Web3, especially NFTs and stuff like that, you can own that content, and you can get paid for that content. So it's basically a subset of the broader crypto ecosystem that's concerned with basically ownership. DeFi, on the other hand, is also a subset, let's say, of the crypto ecosystem, which tries to not only mimic existing financial primitives like loans, like securities, let's say those two, but it's also trying to invent new primitives that cannot exist without the decentralized nature of blockchain. So now you can basically you can do most of first, you have insurance on blockchain now. So that's a financial primitive that's quite traditional. It's a big industry to be disrupted, and it already exists on the blockchain. The adoption is slow, But we have to say, financial system is probably the most conservative of the industry, because this is where people keep their money. So both DeFi and Web3 are currently used mostly by enthusiasts, but in the last few years we've seen this surge of interest with traditional financial institutions, and I think this is where we see the most advancement in the next few years, because I think we all realize that onboarding people through existing Web3 and DeFi infrastructure is a bit cumbersome. But at the moment that, for instance, banks start offering services like that, I think we are going to see a real resurgence, and basically, decentralized finance and traditional finance becoming one.
Yeah. And now I'm curious. Let's see the poll results now, because you mentioned that financial institutions could be more conservative, and since our audience is mainly in the financial services industry, let's see what they said. So to what extent they are engaged in crypto services. I see that most of them, they are testing the water, indeed. So in a way, it kind of comes to back your answer. So most of them are testing the water, reading, researching. Well done. By being part of this webinar is a good step to learn more about crypto services. There are still lots of that are not engaging. But I see here a big chunk, that is actually offering services. So who would like to comment?
If I may add, so I already mentioned we see a big resurgence in the last year, and I think this poll is exactly showing that. If we did this poll, say 1 year ago, I think the results would be much more conservative. What we've done in Croatia, I'm also co-founder of the biggest financial conference in Central Eastern Europe, Money Motion. So what we did in Zagreb is we brought MasterCard. Can I mention brand names? So we brought MasterCard to Zagreb to speak in front of 2,000 bankers and payment professionals about crypto. And they've been saying, we have been using crypto, we have been deploying crypto for years now. And after last Money Motion, that was 1 year ago in March, our company started being contacted by banks proactively. So not we contacting banks, but banks started contacting us. I already mentioned one reason is markets in crypto assets. So now the thing is, the whole industry is much more regulated. But companies spearheading this area as MasterCard, as also Visa, and then several bigger banks in Europe, I think they have been opening the floodgates. And this is also what we see in this poll that you conducted. I suppose in 1 year time we will see much more of testing and deploying.
Yeah. Okay. Now we deciphered what is DeFi Web3, and Masi showed his technical skills. Can you tell us briefly what are the core technologies that are powering this new way of transacting?
It's a difficult job to try to be not technical. I'll do my best. I think a good way to do it is like Nicola did, and take a bit of an evolutionary perspective. So what are the technologies that power DeFi today? First of all, it's the foundation. So it's the blockchain. Started with Bitcoin. You have a decentralized, immutable, transparent ledger where you have these transactions. Everyone can, with a computer and internet access, can read them. Anyone can write into them, provided they have the right key to sign the transaction. But then, and so already there you had the first transfer of value between people. But then there was an evolution, which was the possibility within the blockchain to not only store data, but actually to write and execute code that is, again, decentralized, trustable, readable, etc. And so this is called smart contracts. That's the technical term. Thanks to these, a whole world of applications was born. Well, the first one is tokenization. So you've got stablecoins, etc., that were enabled by this. But then you have lending protocols, borrowing protocols, decentralized exchanges, swaps, bridges, etc. And then again, in terms of evolution, this was very interesting. The problem was that this was born within the Ethereum network. And the problem was at the time, the Ethereum network, it was a bit difficult to support all these applications, because the more complex the code, the more congested the network, the higher value of Ethereum, the more expensive and timely it was to execute these contracts. And so what happened was, there was on one side the birth of alternatives that could support, so we call these alternative layer ones. Probably you might have heard of Solana, Tron, Avalanche, etc., so alternative blockchains. And then the other group was another way to address the problem, which was to use what we call layer 2 networks, which are more fast and scalable networks that lie upon the Ethereum network, and through which transactions happen very steadily, and then they're, let's say, settled and recorded periodically on the Ethereum network. So I think that these three technologies are the foundation around that enable DeFi, Web3, etc.
Great. You managed perfectly not to go too much into technical, and also
my best.
Yeah, we talk a lot about these technologies, and how they show themselves to customers. But Eric, I'm curious to see why did DeFi Web3 emerge? What inefficiencies in traditional finance led to its development?
I think one of the biggest problem crypto is solving is access to the financial system. A lot of people around the world are having difficulties to get access to the banking system or to the international banking system. And if we go back to the stablecoin idea, is that for the first time ever, thanks to stablecoin, by downloading any app, an app on your phone, you have essentially a USD account. And I'm living in Singapore, so when I open a bank account in Singapore, I get like 20 currencies out of the box. But for most people, this is an exception. So for most people, it is very difficult to get a USD bank account. So stablecoin has actually been invented to enable people to hold USD without opening a USD bank account. And I think that's the big revolution, is essentially enabling anyone on the planet to be able to hold US dollar. Maybe soon, there's a couple of other stable coins, Euro, Hong Kong dollar, AED in the UAE. But obviously USD being the most important currency, that's the currency, that's the stablecoin most people wants to have.
Yeah, I was also curious because Nicola, he mentioned the fact that Web3 is also about decentralization and having own control of content. From this perspective, what is lacking from what we have in traditional finance?
So that's a very interesting debate. The beauty of the DeFi is that, of crypto in general, is that you can get access to your own fund. The problem is that requires you to secure those funds. So it's exactly the equivalent in the normal world, where you're having banknotes in your home. It's very difficult to secure that. So that's why most of the people actually keep their money into a bank. And so you have the same thing happening with in the crypto world, where a lot of people are holding their assets not in a crypto self-custody crypto wallet, like maybe a Fireblocks if it's a big company, or a MetaMask if you're an individual, or a Ledger if you put it on a hardware, because all this requires a lot of security, which is difficult and expensive. and most people, what they do is to put them with duly licensed virtual asset service providers, like a Coinbase, for instance, or a Binance, or any of those guys. So the equivalent of the banks in the crypto world, because it's just too complex for most institutions to be able to hold inside your own crypto wallet those cryptos. And I believe that it will take first, it will take a long time for most multinational companies, companies above a certain size, to have crypto on their balance sheet. And even if they do have that, for sure they will use a custodian and a duly regulated custodian.
Okay, great. And I think in a way it's connected, with this idea. Do you want to, be the only one that knows about what you have there, or you also want to share data? I think it's also related to key applications of DeFi and how they are transforming financial services. So Dawe, can you take us through, what you see as the key applications of DeFi?
Yeah, what was mentioned earlier about having a bank account without having a bank, basically, is of course revolutionary combination. But in short, there is the world where it's greenfield, and there are world where the people are more unbanked and the banking services are not so accessible. So that is a whole area where Web3 plays can have a huge potential. But the other sides, of course, the existing traditional finance, which we know, and where you sort of have to displace what's already there, because we know we have, let's say, in the more banked regions, we have lending, we have borrowing, we have investing, and of course payment, and there all these applications which we know today are potentially disruptable, or at least also can be used in a Web3 fashion. But then the financial world could have a let's say an easy front end, so that people don't need to be bothered with all the technicalities to control your own funds. So there is an opportunity for existing players to offer better, cheaper, faster services, just like the telecom industry is offering better, cheaper, faster services, and the end user experience the same, let's say, the ease of use. So yeah, that's basically these two worlds I see. So it has a very broad potential.
Yeah. And talking about the potential of offering crypto products, and now, we want to keep again our audience engaged. Hopefully you are still with us. It would be interesting for them to share where they are dialing in. We also have a poll question regarding reasons of offering crypto products. And we have there a long list that ranges from reducing fraud to improving speed, to removing intermediaries, and so on. So we encourage each one of you to submit your answers. And now we'll go to the next part of our discussion. So we got the theory, we got the possibilities. Now let's see the actual use cases. And we start with a very, let's say, controversial one, CBDCs. So in a way relates also to what Eric says with having cryptocurrency that you can choose to, nobody knows about it, and it's like you have cash, paper money at home. But you can also have centralized exchanges that know things about the users. So CBDCs are an interesting development of Web3, and there are many central banks that are deploying these products. And Nicola, I'm curious to see from your perspective, what benefits do you think that this might bring to businesses and consumers, and how do you see their adoption evolving? Just one moment. First, I'm curious, is any one of you involved in or was involved in CBDC's projects?
I was involved in organizing an event focusing on CBDCs. Last year on Moneymotion, we had a side event on digital euro. We had the head of ECB's digital euro project as a speaker. But I would say I'm a bit. I don't agree with the premise of the question that CBDCs are actually Web3, because what I mentioned explaining Web3 is about ownership, and CBDCs are not about ownership. Owner of the CBDC is still either the commercial bank or the central bank, depending on how the CBDC is implemented. So I definitely think that what European Central Bank is trying to achieve with CBDCs, I think, is a very important goal. It's about monetary autonomy from the US, because two of the biggest payment companies in Europe are both US companies, Visa and MasterCard. The whole banking and payments infrastructure is outdated, it's slow, and what stablecoins have shown to us is it can be done much better. But the issue that I have with it is this top-down approach. So it's basically designed by committee, by European Commission and European Central Bank, which is relatively removed from the payments industry and understanding the practical needs of the industry. Stablecoins, on the other hand, are growing bottom up. They were created by the same people they use them. The stablecoin infrastructure is built by startups, by small companies that now have exploded in growth, of course, but they started by solving practical problems and working directly with their customers. There is really, a big ideological clash here happening. Do we want to have a new generation of payment infrastructure built, on a whiteboard by bureaucrats, or we want to have it built in the industry by people who are trying to solve some practical problems? This is why I would like to disconnect CBDs from Web3, because Web3 was created in the industry by need of better ways of payment, and CBDCs, especially in Europe, were created basically for political reasons that have a lot of sense. But I think that the approach is a bit iffy. So yeah, I'm not really happy how it is going.
Yeah, I encourage our audience to put their questions, but also the rest of the panelists, if they have different views.
No, I think we agree. I don't think for 1 second CBDC is going to happen. Central bank will never, what I would say usually is, like, if cash was invented today, central banks and regulators will forbid it. So for a central bank to do something which is as open, which will disrupt the bank's business model, will never happen. And we'll see the pilot of ECB is a joke, to stay polite. It's not a CBDC.
I challenge you a bit, because Ripple, for example, is a big player in the this blockchain in the Web3 DeFi space, and still they have so many projects with central banks regarding the CBDCs.
Not a single CBDC is existing today.
Yeah, Nicola.
So that project is paid by consultant, and everybody's very happy about that. But there's nothing concrete, and just by the nature, it's orthogonal to the what a central bank should be doing. That's but maybe I'm wrong.
Yeah, last year in Zagreb, we had a panel with Evelyn Whitlocks, the head of ECB's Digital Euro program, and the head of Croatian Banking Union. And the question was, what does digital euro bring to banks? And then there was this awkward silence, and then the head of banking union said, "Well, problems." So Eric, the banks definitely we agree with your narrative, but 3 days ago, Christine Lagarde was quite public about the intent to have a digital euro out by October this year. Now, what does out mean? She did not clarify. I suppose it means that regulation will be voted in the European Parliament. I highly doubt we will be able to use digital euro in October this year, but they are very, very intent on pushing this. So unfortunately, I do not agree with you. I think we will see digital euro quite fast, whether banks and we here like it or not.
Yeah, I think if I can add, indeed, if in the happy flow, it will be decided later this year, and then it will take another 2 to 3 years before we will have it in our in that scenario. And the other scenario, Eric, I believe can also happen because it is a complicated topic. But I think topic of today, mixing it with CBDC, because the CBDCs often also public policy makers also sort of use the occurrence of Web3 and Libra and all these things as a sort of trigger to go into CBDC. So saying, there is this, instead of using these public things, let's use let's say the CBDCs from the government.
They are proposing a limit of 3,000 euros. What do you want to do? So it means that you have a cap on how much you can get.
I think we can get a whole different webinar on CBDCs if we want.
Yeah.
But,
It would be. And again, like the payment methods are various. The same, we can have various way of transacting. But returning to crypto payments, Masi, because you have experience working with merchants, and there are many benefits that they are experiencing when accepting crypto payments. What are key benefits and hurdles? But then, we need to be short because I see that, time is ticking.
Okay, so going back to Web3 payments, because CBDCs are really, I don't like them, and I think they're a horrible idea. So we're a B2C company, and so we're a merchant that offers this crypto payment as a method, and it was built on the conviction that I was saying initially, that crypto payments offer a fantastic way to especially reach new targets. So if you're a merchant and you want to know what the benefits are, I would say if you're interested in selling your products and services to high earning, high spending blockchain or tech engineers in the Bay Area and the crypto hubs in Singapore, Hong Kong, Berlin, Lisbon, crypto payments will offer you that opportunity. If going back to also what Eric was saying, where it's really interesting is in emerging markets. You've got freelancers. They've got a computer, they've got internet, but then they're underbanked. It's complicated to pay them, and then again they start earning in stable coins, and then they need to spend them. So if you want to attract a new, let's say, middle income segment of users across, for example, South Asia is big for this, or also other Africa or Central America, Latin America. I think crypto payments are a fantastic opportunity, and also in the most fragile economies that are, where there's hyperinflation, etc. So if I have to nail it to one benefit, it's just the possibility of reaching all these new users.
But the
hurdles. So we're like a different animal because we're self-processing the transactions, with the exception of the ones that require third-party processors, where Eric and AAA are processing them. We're really happy. But the hurdles, basically you have two parts of the hurdles. One is there's an enormous complexity in managing these blockchain transactions. So this is not on the merchant, it's on the processor, it's whoever is actually doing the job. I don't need to onboard onto Ethereum. I connect to the Ethereum network or whatever network that you have. The problem is that it's the way that it works. We'll maybe talk about it later. Is that there's not a third-party processor that is authorizing the transaction. It's the user that has to transfer money to or funds to a certain wallet. They can make mistakes. They can pay less. They can pay more. So there's like all sorts of user experience that you need to understand how to do it correctly, and also the scale is important. So 80% of the transactions occur via stablecoins. The problem is that only 15% happen on one network, which is Ethereum. The rest are fragmented almost equally across a variety of layer twos and other networks. So it doesn't make any sense for a merchant to implement all this stuff. Only a company that is specialized in crypto or a crypto processor can do this and manage this at scale, with all the regulatory requirements, with all the technological compliance, all the compliance requirements, AML, etc. So I think, so just to go down, your hurdle is just selecting the correct processor for, and in this you want to look at someone that has the right licenses to do this, and someone that has a good variety of stable coins and enough networks to make it interesting.
Yeah. And since you mentioned compliance, I think Eric has here more experience regarding what concerns do merchants have when it comes to adopting crypto payments. Can you talk a bit about this?
I'll be short. I think we're quite, as Massi was saying, we're quite far away from merchants, traditional businesses to be ready to hold digital currency, stablecoins, crypto on their balance sheet. It's the security is an issue. You want to make sure that the crypto are not coming from a scam, from illegal sources, and so on. And so that's why in most countries, regulators have come up with regulation when it comes to be a virtual asset service provider in order to protect that. So in Europe, it's MiCA. In the US, it's a state-by-state regulation. Maybe we'll have some more federal regulation with the new administration in the US. So every jurisdiction has its own, but at the end of the day, it's more or less the same thing. It's all about anti-money laundering and financing of terrorism. So making sure that all the KYC is done properly, and making sure that the transaction monitoring is according to standards, so that there's no risk, or mitigate the risk of money laundering.
Yeah, so we saw the benefits and risk, and returning to our poll question, I'm curious about the results. Yeah, what benefits does the audience see? I mean, what would be the reasons to offer crypto products? And I see that the biggest percent is with offering cross-border payments remittances. And then we have reaching wider geographies, and probably a counter opponent of this idea of introducing CBDCs. Who would like to comment on the results?
Me. Maybe because
all of you chip in. Yeah.
Maybe because we went a bit fast on the benefits. I didn't talk about the B2B side. Maybe Eric has more data, etc. But also on the B2B payments, we're paying half of our suppliers in stable coins over layer 2 networks. Why? Because if I have to pay through the bank, it's 37 euros plus the FX rate and waiting 1 day, 2 days, 4 days if there's the weekend in the middle. And our payments are time sensitive. We need to float accounts immediately, etc. And I can pay my supplier in just a few seconds, send them an email, and we're done. And it costs fraction 2 cents, 3 cents. So I think that there is a very good use case on that. And I absolutely agree with what is. I saw it was the major thing voted on the poll.
Yeah.
On the wider audience, the international audience, I can give you a quick example. We're working, for instance, with Farfetch, which is a luxury e-commerce. And one of the big use case is for people for instance, in Africa from emerging market, because today, even if you can afford to have an international Visa card, very likely, because it's issued from a country, from a high-risk country, it will be declined by the payment gateway. So this means that the only option for these people to make an international payment is crypto, is stablecoin. So this means that for the first time, a global merchant will be able to sell at scale into emerging markets.
Yeah, but still, so you talked about massive B2B, then you touched on B2C. Some say that user experience when it comes to crypto payments sometimes can be a challenge. Nicola, what do you think? Is it or not? How can the industry address this issue?
Yes, well, my mother doesn't know how to pay with crypto, so that means we have a user experience problem. Definitely. Crypto wallets are usually built. To engage in any part of crypto, you need a wallet. Of course, you can use a custodial wallet provided as a service. Now you can now even keep your crypto in Revolut, for instance. But if you want to use more complex services like DeFi, you need your own crypto wallet, and those are relatively complex. It's not easy to. Even the simplest payment on a web shop with one of the more popular crypto wallets, it's not easily done by a person that doesn't already have some practice with it. And I think if we want to reach next billion users or even the first billion users, this is something that needs to be fixed. And in crypto industry, we still live in this bubble. We are building for other crypto people. Not a lot of companies are building for the mainstream. I think this will be solved against our wishes, basically by traditional finance. So we at Electrocoin, last 10 years, we've been trying to build, user-friendly services, and we've been, not a lot of companies really do that. But as we enter the banking market, for instance, when we partner with banks that offer those services to their clients, then it is super easy because banks cater to all the demographics, to older people, to younger people, to everybody. So if you know how to use your bank account on your mobile app, you will know how to use the crypto when it's integrated directly into the banking app. What I see happening in future is definitely traditional finance lowering this bar for entering into Web3, be it payments or decentralized finance or whatever. But I sincerely hope that we will see more focus on UX, on usability, or even of the most complex DeFi products, because this is the only way if we want to keep the decentralized nature of crypto while we're moving into the mainstream. Because relying on traditional financial institutions will, of course, kill the decentralization. Those are central points of reliance.
Yeah, but making it easy for clients is the opportunity for traditional finance.
Exactly.
It will be the same phase of the adoption, and traditional finance does not have a choice to ignore it anymore. We have trying to ignore it a long time, but nowadays with, let's say, certainly driven in the US, but also regulation in Europe, I see more and more engagement from traditional finance. And well, people internally, there always have been enthusiasts in those big organizations, banks, but they were not so much heard over the years. But more and more, the C-suite is seeing the strategic fork in the road, which is coming up, and everybody wants to be a fast follower and wants to do no regret steps. But there are definitely quite some no regret things banks can do, and without because they're all very sensitive to the regulator and everything. But times are really changing fast at the moment.
So now, yeah, what role will traditional banks will play in the new ecosystem?
Well,
A question for all of us.
step one is solve the usability issue of the wallets, basically,
As
because
Nicola mentioned,
many people just don't want to be bothered. So if you could have hold crypto assets through your normal bank account, that you see happening more and more. I know in Switzerland is already pretty normal, but in the EU we see it now also coming, and that is the most easy step. And then there is even banks could keep it off their balance sheet and keep it on their balance sheet. There are different flavors there, and that is the first step. And from there onwards, you could start indeed offering B2B payments, or you can offer, of course, investment yield services, and just call it in more traditional terms like a savings account. Or but there is also the lending and the borrowing can be faster, better, cheaper. So yeah, there's a big opportunity, and this is only the retail and the wealth segment. There is the whole world of corporate banking, and where more and more corporates also use this as a reserve asset or a payment asset, and then there is the whole world of the institutional side when it comes to using digital assets in the form of tokenized traditional products, like if you have a tokenized bond or tokenized real estate. That is all starting, and once, let's say, the traditional financial instruments which are used in the financial plumbing become tokenized, then you could rebuild the whole financial structure with less complexity, and possibly also a different approach to regulation. Because what I see now, we use very much traditional regulatory formats trying to apply them to crypto, but the real debate on where crypto can really have different approaches. For example, the counterparty risk and the balancing out of positions, the automatic adjustments. In all those crises, crypto and DeFi always have been working and working as they should work in all those let's say big crises of let's say FTX and Celsius and what have you, even empty box. The whole DeFi infrastructure did not fail a single day. People lost money, of course, but that's all in the game. But if we could seal that off by easy to use services, and that is a huge opportunity.
Yeah, thank you. I see here some, because we are getting close to the end of the webinar, and I also want to touch upon one or two questions. I see here you mentioned in a way mixing old with new. So I see here a question. Everyone can take it. So how do you think subscription services should approach crypto payments right now and in the future?
Yeah, that's an interesting question. I was thinking the idea with crypto subscription service, I assume that is services where today is a sort of the merchant pulls the payment, not a push payment. So I can imagine a smart contract service where you put in a balance, and then there is sort of a pull mechanism. How you could do that? Maybe it is already there. Maybe my colleagues can know much better than I.
We've been looking into this because it's of course we love subscription models, and they're also very interesting. For example, for the customers that are doing mobile credit top-ups, no, that would be. It's a problem because, as Lau was explaining, it's the user that has to authorize the transaction. So the only technical way to do this, or at least that we could conceive, is that at least a balance has to be floated somewhere, and then there's a smart contract that does this. So it's kind of complicated because it's like, it's almost like paying it all all at once. I'm sure that something is going to come there, but it's a very interesting topic, the one of subscriptions. I'm thinking of companies like Netflix and stuff like that. That's.
Now, another way maybe, and that's also I think a very interesting future is the whole collateralization, because in the whole lending and borrowing, the crypto is used as collateral, and you could even envisage maybe using collateral for subscriptions.
And then there's also pre-authorization. For instance, if you want to book the room, we have been working with a booking engine, hotel booking engine, and if you want to pay with crypto, if you pay with card, then it basically blocks an amount. That's the pre-authorization, and then you can book the room. But if you're paying with crypto, you basically have to pay up front. You can do the technical loopholes that Massimiliano was mentioning, but it effectively boils down to paying in bulk in front.
Paying first, yeah.
Yeah, great. There are other questions for our audience. If we don't manage to answer them, we will reach out to you. Our speakers are going to reach out to you after the webinar in the next couple of days, with answers. Because I'm also curious about one thing. Okay, so I offer payments. Now I learn more about Web3 payments, and I want to build a Web3 payment strategy for the next 5 years. So in 1 minute, if you were to tell me what are the things that I need to follow or pay attention to, what would that be? Nicola.
Well, if you already accept payments, just integrate a payment processor, crypto payment processor, and start accepting crypto payments, and notify your customers you're accepting crypto payments, and then bam, you're in it right away. Start following developments in the stablecoin industry, because this is where all of the action is going to happen. See how traditional big financial institutions play with this field, what they are doing, and try to see how that fits into your business model. So that's it, basically. Start offering crypto payments right now. I think most of us here can help with that, and start looking what the big institutions are doing.
Eric.
I fully agree with Nicola, obviously. I would add, especially if you're doing payouts, don't forget to use crypto payouts, in particular stablecoin. I'm sure a lot of your suppliers, if you're a marketplace, a lot of your sellers will be also interested to get paid in stablecoins.
Okay, Dawe.
Yeah, I've not much to add with this very distinguished group of practitioners. We do it all day. I think all the good points, and reach is the key. That if you accept it, make sure you have all the different networks, access to those networks, and use providers who can offer you that you don't need to bother with which wallet, with which many that it just works, and there are very specialized providers offering this.
And Masi?
I would just add, so of course I agree with everything, including select a provider that offers stable coins and a good variety of networks. Maybe just one thing it would be, of course, the regulatory side, make the right choice with people.
Should we be scared about it?
Right, licenses. But I would also add, you probably want to have at least a generic understanding of these transactions and how they occur, or a good relationship with your provider. Why? Because you need to decide what you want to achieve. So like Bitcoin payments, they're very expensive and take a long time. Stablecoin payments through certain rails are immediate, etc. So depending on what you're selling, if you're online, offline, etc., you're going to together sit down with the provider and say, I want to achieve this, and they will activate certain networks and maybe deactivate the other ones. So I think that developing at least a general understanding and then having a good relationship with your provider is probably important.
Great. Thank you all for such an insightful and educational and inspiring discussion we had today. For our audience, we had more points that we wanted to tackle, but time runs quick when you are having fun. That's why we have a series and video interviews and lots of content coming up about Web3 payments. So keep an eye on the papers and also on these guys because they are regular contributors to our website. So once again, thank you all of you for your presence today. And for our audience, a recording of the webinar will be available soon for you to watch it again, share it, and feel free to offer your feedback. So thank you so much.